If you've been keeping up with the real estate market in Ontario, it's been crazy this year. I know we saw a major crash last year in August of 2022, but we saw an unexpected rise in property prices this year in 2023 spring. That wasn't really expected. We saw prices rise up again, another like 5 to 10% in some cases. And we saw multiple offers, at least in my area of Hamilton, Ontario. So it's been like a roller coaster, right? And I really want to point out something to a lot of people because I've been having conversations with people about what to expect, at least for the next little while, like the next couple of months. We're in September 2023, so we're going into the winter. And what it's looking like more so is that it's based on the inflation data coming out and what we can learn from last year, which is probably our best reference point for this year. So a lot of people are going to face issues if, they're hoping for a better outcome coming this winter, and if they're just holding on. And you need to be really careful if you're buying a property, especially if you're selling, because things are really going to slow down. And you need to make the right moves and really look into what your options are so you don't end up losing a lot of money, because that can happen right now. So kind of what led up to a lot of this stuff is we saw like that spring market, but then as soon as we saw rate hikes happen June, July, things just started coming down. So you got to understand the Canadian economy is so sensitive to interest rates. I don't think anyone realized that until we saw like the last 18 months of like ups and downs. But things have not really been stable, but we saw like different cycles, right? Like from last, I would say October to December, we saw like a slowdown. And then I would say end of February to beginning of June, we saw as soon as the Bank of Canada announced they're pausing rates, things started to pick up again. And from that point on, like up till June, we saw like a lot of sales happening. If you look at like a lot of the data, you can see it wasn't that different from like the traditional spring, summer months. But then as soon as the rate hikes start getting announced, and especially once we got that July one, activity really slowed down. And that just shows you how sensitive our markets are. So now we're at a point where like it's kind of just like on a downward trend. Like we're seeing listings stacking up. Properties are sitting on the market for a longer period of time, right? Generally, we would see like 2 to 3 weeks, but now we're starting to see closer to that 30-day mark for days on market for a lot of properties. Now, even though this month we got that announcement of a rate pause, we've also been hit with this news that inflation's higher than expected. It's because of energy prices and housing costs, which, funny enough, has to do with the mortgage rates. Which it's like it has to do with mortgage rates. So it's like a funny thing because we're seeing that as mortgage rates rise, rents rise, housing costs rise. So it's like the reason why we're raising rates to tame inflation is causing inflation. But that's another point. So that's kind of where we're at right now. And similar to last year, this is what happened. Inflation isn't where it needs to be. We were in September. We saw the big rate hikes. Things slowed down. They were kind of where they are right now. The bank couldn't afford to cut rates, and they purposely raised rates, even though when they didn't really need to, just to get some level of like peace of mind. So, the market doesn't have any like room to pick up in the winter. And then I remember there was like a December rate hike last year. So I think we're going to see something similar where if this data continues on this trajectory where inflation isn't really coming down, we're not seeing prices really come down too much, we'll see probably another rate hike right this year. And that's going to cause that same winter slowdown we saw last year. And then the real thing I like to highlight more than anything outside of numbers is the psychology behind some of this stuff, because what happens is when we see like rates start to rise and the economy is slowing down and there's no activity and it's winter time, so people aren't really going out, it really affects people psychologically, and buyers stop looking. Plus the news doesn't help, right? So everything is like working against people and on their mind. Sellers will have like these listings that are priced properly, Maybe they're even solid listings. But unless they really stand out from the rest, they won't sell. And funny enough, we saw that last year where that happened, but people would just remove their listings, and then when they relisted in spring, things like, they sold for what they wanted. So that's, I think, what we're going to see again. So if you're someone who's like buying a property, you can probably find some really solid deals. And if you're selling, I would say like try to hold off if you don't absolutely have to sell or you're not moving in the dead of winter, because it's probably going to be a painful experience, in my opinion, unless you have like an outstanding listing and you're offering a lot of value for a really good price, which you should try to do. But we had such a hot market, it's like everyone forgot what that actually is. So I would say, like, me personally, I am hopeful and kind of expecting that as the spring market comes around, just like last year, when we saw everything slow down, we saw prices were really slow. Once buyers started to come out and there was another pause on rates, people started to bid on properties, prices started to rise a little bit. They didn't go crazy, but things stabilized. So I think we could see that again, even if rates are slightly higher, unless we see like massive rate hikes for whatever reason, which will be catastrophic, right? Like, a lot of people will lose their equity, and you got to remember, more people have renewals coming up on their mortgages in the coming months. So unless that happens, I think we'll see another recovery in the spring again. So like, even like when I'm talking to investors right now, I tell them, like, if you can pick up something like based on the data in this slope time period, and let's say if you're flipping or even if you're like going to hold on to the property, if you can fix it up and then either refinance or sell it when things improve, that's where you can really like cash out, because that's what we saw happen. Like, we saw deals get picked up last year in the winter, like 25, 50K, 60K below market value. And then those same deals as is could have sold for that much more, right? Which is crazy. But so you can capitalize on that. And then if you're like a first time home buyer, like, you're obviously going to be a little bit more picky because it's the house you're living in, but you can probably get reasonable deals, especially like in this time period, like this fall time where we're in right now. Some of these properties are overpriced. As long as they're like flexible, which they will need to be in some cases, just based on where everyone's financial situation is. If they're still in the market at that point in time, you can probably get a pretty solid deal, because that's what we saw, same thing last year, right? So it's a good reference point. That's why I keep referring to it. Like, what happened last year is the closest thing we'll get to a reference point of like what could happen when things are like this. Because if you refer to 20, 30 years ago, I know a lot of people like to do that. It's not really accurate, because we're in a different economy. We have much more debt. There's inflation. The cost of living is a lot higher. Everything's a little bit changed. You can't compare like 20% interest rates in 1980s to 6, 7% today. It's actually a lot more painful even today, because household debts are so much more and the cost of everything is much higher, while incomes aren't that much more, right? So I'd say that's why it's a good reference point, like looking back at last year. But just be careful, right? If you're buying, selling, investing, whatever you're doing, like, you don't want to get caught in the wrong cycle. And we're seeing it change every couple of months. So just talk to someone who actually understands this stuff, that's in your market. I always say that for a reason, because there's different trends specific to different markets. Even I'm talking like cities that are next to each other. So if you're looking in the Hamilton area, or that's kind of where you're focused on, reach out to me. I'll leave my contact info below, and I'd be happy to connect.